So we're rounding up the final account. We've done the profit loss account. But before we go to the balance sheet, we need adjustment for the balance sheet. Yeah, this is the balance sheet. We have the balance sheet already. In your balance sheet, we need intangible assets, we have non-current assets, we have, stand up already. We have non-current assets, we have current liabilities, and we have non-current liabilities with capital and drawings. These are the items in your balance sheet. But these items, they need adjustment. That because we started with adjustment, additional information. So, in the previous class, we were talking about. So here, go back to your trial balance, please. Your trial balance. Your trial balance. The question before now, trial balance. Do I have it here? I just hope I have it. Do you have the trial balance there, please? Yes. Okay. Let me see if I have it. I need it. Let me go. Sit down. So for the trial balance, through the trial balance, we have our assets. We're done with expenses. We're done with trading. All we need now are the words of the business, which are assets, liabilities, and capital. So those are the items we need for the balance sheet. So the first one here we have is patents. Patents is 28,000 in your trial balance. Please open it.
23,000.
Patents. 28,000 patents. You find it there? Patents is more like your intellect, your own idea that you have protected. So it's an intangible asset. What do I call it? Intangible asset. It's an intangible asset because it has value, but you cannot touch it.
Can you the meaning of intangible?
Yeah, I just said it now. It's something that has value, but you cannot touch it. Intangible.
Like Bitcoin.
No. Like your reputation, your name, goodwill. Do you understand? Your copyrights. These are your intellectual property. So no one has right over it. It's yours. Like when I make my YouTube videos, it's go through as soon as before I upload it, it will check if there's any copyright on my video before it's uploaded. So same goes to anyone who wants to use my content. So it's my right, it's my value, it's my worth. So patent is just you protecting your intellect, your idea. So it's an intangible asset. So that's the first one we have. Patent is an asset, 28,000. Is that clear? Yeah. Is it clear, please?
Yes.
Then we go on. We have the fixed assets. We know fixed assets already. These are assets that will stay with the business for more than a year. Land, building, equipment, machinery, furniture and fittings, motor van. These are assets that stays with the business for more than a year. So we have building, equipment, and delivery van. We have them here. Building, equipment, and delivery van. So the cost of those ones, we have the cost already. You know how we got our depreciation, right? We did the depreciation before, right? We did the depreciation. Yeah, we did the depreciation before, yeah. So we did the depreciation for them. So these are the depreciation. So if you take the depreciation away from the cost, historic cost minus depreciation gives you your net book value. I think we talked about that before, right? Yeah. Yes or no, please? Yes. Okay. So look back here. I think we're still fine. Nothing for now. So buildings, 500,000, equipment, 30,000, delivery van, 62,000. These are the depreciation for the year. You take them away, give you the value of the asset. So now this is the real value of the asset presently. Historic cost minus depreciation gives you the value of the asset right now. Did you get that? So these are the value of the asset. Now our current assets. We go back to the additional information. For the current assets, we have stock. It's going to be your closing stock, not opening stock. What do I call it? Your closing stock. Your closing stock is a current asset. It's a current asset because it is expected that it only lasts for 1 year within the business. So your closing stock is the first current asset. Your opening stock is the stock you have for this year. Your closing stock is the stock you have. No, your closing stock is the stock you have at the end of the year. So that is what is left in the business. So it is part of your balance sheet. It will be part of your trading account because you have to take it away from your trading account. And because you are taking it away from your stop writing, please. Because you're taking it away from your balance, or from your trading account, you add it in your balance sheet. Stock. So your closing stock, you had it. Stock of stationery. Remember the stock of stationery, we said stock of stationery on 31/12/2020 was 1,005 at the end of the year. 31/12/2020 is the end of the year, yes or no? 1,005 at the end of the year. So you put it in your stationery. Do you get that? Now, debtors. Yes?
Stationery is low, like 3,600.
The total of stationery is 3,600.
Yeah.
And in the additional information, stock of stationery at the end of the year was 1,005.
No, 2,100.
Hold on, please. Stock of stationery at the end of the year is 1,500. 1,500 minus 3,000 is the amount you spend on stationery for this year.
Mr. Google has delivery van, depreciation.
Yes.
It's not like this.
What?
Yeah.
This is 48,000, yes.
That's right.
والعشرين ضربية يطلع لك
Delivery van
62,000.
is 62,000.
That's this.
Yeah, that is depreciation because it is on cost. Go back to your delivery van. Look at your delivery van. There's accumulated depreciation of 14,000 before now. Have you forgotten that?
Accumulated.
Accumulated before on delivery van.
14,000.
You have to take that away. Do you get it now? Okay. So here you're back to your question. Your stock, the total stock of stationery, the amount you spent on stationery was 3,006. But during the year, at the end of the year, you have 1,500 left. So which simply means 2,000 was spent on stationery. That goes to your profit and loss account. Yesterday we prepared that. When you check your profit and loss account, you see it. 2,000. So the 1,005 goes to your balance sheet. Do you get it now? Great. So that's 1,500. Now we have advertising. Go back to advertising, please. In your travel, advertising is 6,000, right?
Yes.
The additional information for the period said advertising. Now we have prepaid. 30/4/2021 was 6,000. That was April, May, June, July, August, September, October, November, December. 8 months, right? So 6,000 multiplied by 8/12 gives us 4,000. 4,000 is your expenses. The expenses minus the total gives you your balance sheet. Balance sheet as prepaid. Prepaid means you have it ahead. You've paid for what you have not received the service.
Like the school, right?
Yes, it's prepaid. Prepaid means you have paid for a service which you are expecting it to be rendered to. Accrued means you have used a service that you have not paid for. But prepaid means you have paid for a service that you have not received. It's an asset, current asset. Is it clear? So that's about advertising prepaid. Advertising prepaid. Where is it? How do we get it? Okay, through that place anyway. So I think you understand. No, we have to do stationery first. Do we understand stationery?
Yeah.
Now we have debtors. Let's go back to debtors, sorry. Before advertising. So for our debtors,
32,000.
the total debtors is how much? 32,400, right?
Yeah.
The total debtors is 32,400. And they said we should make, based on the additional information, they said provision for bad debt to be adjusted by 5% of debtors. Provision for bad debt should be adjusted by 5% of debtors. Before we go into this, as soon as we have debtors, we need to make provision for bad debts because not all the debtors will pay back. That is why we make provision. Do we understand why we make provision now? We're making provision because not all debt will be paid back. Not all debt will be paid back. That's why we make provision. Do you get that? So here we have, they said 5% should be made. 5% of the total debtor, that's 2,500, gives us 1,620. 1,620. Do you get that? So look at your balance sheet. Debtor is 1,620. You take it away to get the value of debtor. 1,620 is our new provision for bad debt. It increases or decreases, you have to take it away from your debtors. But if it increases, it has an expenses on your profit and loss account. If it decreases, it's an income on your profit and loss account. But either ways, you have to take it away from your debtor. Do you get my point or not? If provision for bad debt increases, it is an expenses in your profit and loss account that we prepared yesterday. If it decreases, it's an income. You had it in your profit and loss account. Either ways, they will be deducted from debtors. Clear? Then we have debtors done. Now let's bad debt provision. Okay, we did that. Now the bank. Your trial balance, we have the bank balance. 44,000 is it?
44,500.
Yeah, 44,500. It's on the debit side. Yeah. On the trial balance is an asset. 44,500. I think that is clear. Any question up to now?
No.
Okay. Now, advertising prepaid. We explained it already. Yeah. Look at your advertising prepaid.
Yeah, we did.
For advertising prepaid, for 8 months gives you 4,000. This is the expenses in your profit and loss account. 4,000 minus 6,000 is the prepaid. 2,000. Your 2,000. Where is it? 2,000. I think it's clear. Now we have insurance. Insurance prepaid. Yeah. Insurance.
8,200.
Insurance is 8,000.
200.
No. 8,200, right? Sorry. I keep writing 8,000. I don't know why.
Okay.
8,200, right?
Yeah.
8,200. So the total advertisement is 8,200. Okay. Then we have drawings from advertisement or from insurance for the owner's car.
Oh, the drawing is 700, not 500.
Thank you. $700, right? So this goes to the owner's car insurance, right?
Yeah.
So our total insurance is what? 7,500. And for 9, they said we should calculate it for 9 months, right? 9 over 12 gives us this, right? So the total insurance is 7,500 minus 5,625 gives us our prepaid. Look back to insurance. Insurance is what? They said in the additional information, insurance was for the year 31/3/2021. So 3 months is done. So it is 9 over 12. Do you get that? So 9 over 12 multiplied by 7,500 gives us 5,625. 5,625 minus 7,500 is our prepaid on insurance. I think it's clear. Do we get insurance?
Yes.
Okay. Now we have interest on loan. For the loan, for interest on loan, here they said provision should be made for interest due on the loan, the rate of 7% per annum. The total loan is how much? Term loan, 90,000. 7% in 9 over 12.
From where we got the ones?
What?
From where we got the ones?
Term loan. The term loan starts from April. It starts from April. April, May, June, July, August, September, October, November, December. 9 months. You count loan from the months you took it. So April, May, June, July, August, September, October, November, December. 9 out of 12 months. 9 over 12 multiplied by 7% times 90,000 gives you 4,725. So 4,725 is your loan. This is what goes in your profit and loss account. Yes or no? Now go back to the trial balance. Loan interest paid is 1,200. Do you see it there? In your trial balance, loan interest paid. We paid 1,200 already. Yeah, we paid 1,200 already. Check. Loan interest paid. We paid 1,200 in the trial balance. So you have to take it away now because we paid for that. So 4,725 minus 1,002 is 3,525. So our interest on loan, where is it? Where is that? Yeah, 3,525. Do you understand that now? Do you get that, please?
Yes.
Okay. Now, I think we're done in all this side. Any question about the assets?
No.
Good. Now, fixed assets. The total asset is this. The total fixed asset is that. The current asset is the total of all this, which is 103,655. Now we have liability, current liabilities. For current liabilities, we're simply talking about the debts. So that's done. Now please, we're done. Now we have current liabilities. For current liabilities, we're simply talking about debts that we have to pay back within a year. So for current liabilities, like I said, these are debts that we have to pay back within a year. We have to pay them back, current liabilities. So the first one we have is creditors. Go back to your creditors here. Creditors, 24,400. There's no adjustment needed, it's done. VAT, value added tax. These are tax on consumption. VAT is there. We have it as 13,600. Loan interest, we did it already. Loan interest on loan, 3,525. How did we get this? The interest is on the term deposit, on the term loan from April to December, it's 9 months over 12 times 7 over 100, which is 7% of the loan, 90,000. It gives us this. This is what we posted in our profit and loss account. This minus what we have in our loan interest, 1,002 is what we have now. I think that is clear. Then we have PRSI and USC, sorry. That's around 19,700 is done. So this is your total current liability. Listen please, this is what current liabilities. What do I call it? Current liabilities, So your current liabilities, you take it away from your current asset. This is your current asset. So current asset minus current liability gives you your working capital. What do I say again? Better sit down. You're going nowhere. Sit down and listen. Sit down and listen. Where is it going? Just came in and see what to be moving around. Sit down. Sit down. I said you can, but I said you cannot. Okay? Working capital. The formula for working capital. Current asset. Who are these people? Current assets minus current liabilities. What do I call working capital again? Current assets minus current liabilities. So go back here. So current asset, the total current asset is how much? Is something here? Are we sure?
No, Europe, it was 100,300 and something.
Here, right?
Yeah.
Does any of you have it? No, interest prepaid. Just the total, right?
The total of this.
Okay, please, can someone add it for me together now, please?
Just take a picture.
I took a picture. Okay. Let me check. Hey, please, stop that already. It's not a joke in this class. I'm going to kick you out of my class. Let me check, please. $103,655. 103,655. 103,655. So we have 103,655 minus this gives you your working capital. I think working capital is clear now. Working capital is current asset minus current liabilities. I think that's clear. Now, our net worth. Your net worth is your current asset, your working capital plus your total assets. Net worth is what? Current assets, net worth. Total asset, total current, non-current asset, plus working capital. You can know these formulas already. Your net worth is what? Total non-current asset plus working capital. Total net asset plus working capital is your net worth. So do we understand net worth? Total non-current assets. Total non-current asset. This is your non-current asset. The total of this plus working capital is your net worth. Clear? So we move on. Now it is financed by, what is financed by? How did the business get its money, source for fund. The first one is the loan.
Is this a definition?
What?
Is this a definition?
Which one?
The premise.
No. This is the business. How did the business source for fund? That is the finance. So your total net worth must be the total amount of money you have. So how do you now calculate the total amount of money you have? These are the money you have. This and this must be equal. Your net worth is the worth of the business. The worth of the business was equal to the capital employed. Stop writing, please, and listen.
What does capital employed?
Capital employed is the net worth of the business.
That will be the same.
Yes. So the amount of money you put into the business should be your net worth. So this is all what the business is worth. So if this and this doesn't balance, then something is wrong. So the loan you took a loan of 262,000. No, your capital. Capital is the amount of money the owner of the business invested in the business. Capital 262,000. The loan you took 90,000. The loan 90,000. Profit made in your profit and loss account. So we move on, please. So the capital, the amount of money the owner of the business invested in the business. The loan you took 90,000. Your profit and loss account. The profit we made in your profit and loss account. 272,530. Now drawings. Let's go back to our drawings. Our drawings. Part of the drawing was 700 or 500. 700. For the owner, for insurance of the car of the owner, 700. And the total drawing here, the total drawings here, 14,200. So 14,200 plus 700 is 14,900. Do we get that? 14,900 drawings. So you less drawings. You add capital, you add profit, you less drawing. So this gives you 519,630. 519,630 plus 90,000 is 609,630. Do you get it? For your finance, your loan, your profit, your capital, you add them. You less drawings. So your finance, your capital employed must equal to your net worth. You get it? So you can write now.
Like this, right?
Yes.